Is a 100,000 Bitcoin still in play for 2021? Ladies and gentlemen, we talked Friday about if we didn't break a certain level by Monday morning, then the conversation had to change, guys. And where we stand right now, we're sitting at about 48,000 and a half. So I still feel like we need to have another discussion, guys, because I won't say that I am concerned, but I am very vigilant right now. I am very aware that we are in a very, very peculiar situation when it comes to the price of Bitcoin and our outlook for the rest of the year. Now, guys, in this video, I'm actually going to show you not just Bitcoin's chart, but I'm going to share with you the dollar currency index, because comparing these two charts together paint a very, very interesting picture and gives us a very interesting perspective, guys. Now, we're going to start with the Bitcoin chart because what I'm seeing, like I said, doesn't have me concerned, not at all. And by the end of this video, you're going to know why. Because if we are about to enter a bear market, that is a good thing. It's a good thing for many reasons. We'll talk about that in a second. However, we're going to begin this video on the positive side. Okay, so where are we right now when it comes to Bitcoin? Now, we're on the monthly time frame here, okay? We're focusing on the monthly and the weekly in this video because on the intraday, guys, it's all bad. It really is. I'm not even going to sugarcoat it for you. We are pushing down trends on the 4 hourly, downtrend on the 1 hourly. That looks kind of strange, but downtrend on the 1 hourly, guys. Same story for the 4 hour as well as the daily. Okay, this daily chart right here, this is very important. You can see this descending line, the moving average is coming down. So, and then we also have the contractions as well, which means that these bands are about to open up. And because we're in the lower channels, it's going to be a very volatile ride, probably to the downside, guys. But if we want to get some clarity of how this could go the other way, we have to look at the larger time frames, because you can see here on the weekly, guys, the moving average is steady, is still moving up slightly. Okay, still moving up slightly. You can see it's peaked right here above, just a little bit above the candle that we are at now, sitting at 52,000. So from a weekly perspective, our target by the end of this week, we have to get back to 52,000 in order to be in a safe territory, because as you can see here, guys, on the weekly, we are in that lower channel, which means that we are actually on the not so safe side of these bands. However, we have a level of support here sitting at around 43K. That support was established back in August and September. If we come down below that, which we did wick to about 41, okay, November 29th, we wicked down to about 41. If we come back down to this range, this is the next breaking point, 42, 43. All right. So if we begin to come down to this range, guys, then the monthly time frames come into play. All right. And that means that our next monthly resistance, our next level of resistance for the monthly is around 34,000. It's really around 34,000 because, see, the monthly resistance over the year, we'll call this the yearly resistance level or the yearly support level, excuse me, has been around 33,000. Okay. There's always, when we have a correction, when we had the correction in May, it brought us back down to 30,000. When we had the correction in, what was that, September, tried to get us back down to 30, to the 30s again, even with the wick down there. Okay. But with us being in this position now, and another thing that I wanted to show you too is the RSI, guys. Now we have fallen through. We have fallen through this channel, but we are right here again at that support level. So that is why I say I am not concerned, because where we are right now from a technical perspective is actually a safe territory. Okay. Now, I can say that we could stay here, we could go sideways for the week, And then by the weekend, we'll start to get some more action that may give us more information about where we will go next. So, as far as this week goes, guys, we just got to play it by ear, step by step, and move cautiously. Okay. That's why this technical analysis got its own video, because there was a lot I wanted to give you in this presentation. So, that was the bit of positive. Now, let me get the negative out the way. Let's get the bad news out the way, guys, because there's something I'm seeing when it comes to this dollar currency index. Now, this theory here, it's still in the formation stages. And if there's someone out here listening that has a little bit more experience in this particular philosophy, feel free, let me know down in the comments. But what I'm seeing right now, and this is the monthly, again, this is the dollar currency index, guys. This is the strength of the US dollar. And TradingView, you can see here, we have it going all the way back to the 90s, guys, to 1994. Okay. And you'll see that if you want to know about inflation, you want the for sure answer, I'm gonna show it to you right here, guys. The last time the dollar was prominent, February 1st of 2002. 2002. Okay, that's the past, and you can see it hasn't recovered since. Now let's zoom into where we are now, though. Okay, because there's something very interesting playing out here. Okay, now I've been spending the majority of the morning comparing these candlesticks, these monthly wicks, with the monthly wicks on Bitcoin. Okay, I will tell you, out of 12 months, 8 out of 12, this correlation occurs. Okay. So, what I'm seeing, and you can tell here, we can apply our typical Bitcoin chart analysis to this same thing, guys. You can see the Bollinger Bands they're universal. Okay. That's why I use them. That's why I use the RSI together. These are universal indicators that have been in use in traditional markets since the beginning. Okay. So, again, what we have is the dollar currency index. And what you can see here, guys, is similar behavior, contraction. They pushed us down. We wicked up here, topped out, contraction, pushed us down to the downside, and it was a very volatile ride. You can tell by the widening of the bands. The bands continued to widen, and we came down even further. Now, what I find interesting is that at the same time, what was this, 2020? October 2020, November, December, January, all greens, right? Dollar currency index continued to come down with only slight increases, but still remaining in the lower channels in February, March, February, going into April of 2021, before we had that, the situation earlier this year. However, we've seen in the markets that Bitcoin has been moving quite uneasy, uncertain. It's been moving through the markets with uncertainty. Every time it gets to 60,000, it has some kind of situation, interpersonal issue, I believe, and then it just goes back the other way. That's what we've been seeing. But when I look at this dollar currency index chart, guys, and we'll go over to the weekly, what I'm seeing here is that at the same time that Bitcoin has just been indecisive, the dollar has been steadily increasing in strength. Okay, this isn't value, this is the strength of the dollar. All right, so you can take this number, we're at 96.2. You can look at that as being, that is the value of a US dollar worldwide. It's about 96 cents. Okay, so what we have been seeing play out over the last 6 months is a gradual increase in strength of the dollar. Okay. Of course, the stimulus stopped and the unemployment stopped and everything, all the money printing kind of stopped. So that in a certain way brought more strength back to the US dollar. So what I'm seeing here, and we'll go back to the monthly, guys. What I'm seeing here is that the dollar has more room to increase. So that means that over the next couple of months, there's going to be a series of events to play out that is going to bring more strength to the dollar. And if that is to be true, guys, if that is to be true, keep in mind, this is the monthly time frames here. We're making a move up in December. If The dollar is trying to reach this top band, guys, or get anywhere near it. It's going to take 2 to 3 months. And if that's the case, judging by what we see now, if if the strength of the dollar is increasing, and that is having, and that inverse against Bitcoin is causing Bitcoin to come down because Bitcoin versus the US dollar, that's the metric. The strength of the dollar is trying to increase. The price of Bitcoin is coming down. The market is very uncertain right now. There are a lot of things going on in the world that are affecting investor behavior. So, what I'm seeing, guys, is if the dollar is looking to increase strength over the next couple of months, then, and we are, as you can see here, guys, in the red, and then the RSI is also indicating that we are broken through this channel. The next couple of months we won't be at the whim of Bitcoin. We'll be at the under the will of the dollar. Okay. And then it kind of makes sense when you zoom out and look at the bigger picture. It's the holiday season. This is the biggest time of the year for the dollar. Okay. But again, it's just a theory, guys. I'm looking at the data, and this is what the data is presenting me. Now, of course, historically, in Q4, the crypto markets have been 3 for 3. Okay, 4 for 4. We'll count that. Let's see, 2017, 4 for 4. Okay, if we don't come out these next few months in the green, a number of things are going to happen in 2022. Okay, first off, that $100,000 mark, we won't see that until the summertime. We probably won't see that until the summertime, maybe next fall. Okay, so that would mean that sentiment is destroyed. We didn't reach the target that we wanted. People are going to pull out the market, and we may go into a small bear cycle. If that is true, then this is the greatest moment that could ever be before us, guys. And I'm going to tell you why. Because we already know what the projects are. We know which blockchains are doing what. We know which blockchains are working with who. We know the power. And we also have the information, the education on where they're going to go and what they're doing. Now we get it all at a discount, a prolonged discount. Okay. Bear markets, to me, guys, I've learned in my short time here, they're accumulation periods. Okay. Accumulation periods. If you believe in blockchain and you know where this is going, you know where the world is going, this dip, this potential bear cycle is not something to be afraid of. This is the greatest opportunity we could have gotten. Honestly, I still feel like I don't have enough crypto, and I know many of you would agree. Well, now, guys, we have an opportunity to even get more wealthy. Okay. Because if we do go into a small bear market, then that means that the pump that comes after this is going to make us all millionaires. Probably some of us multimillionaires. Okay. Because what's still in play here, guys, is this top band still touching 90,000. So when it does get ready to go that way, it will go that way and it will happen fast. Okay. But as we stand right now, short term, with the behavior of the dollar right now around the world, to my knowledge, it's going to create a very volatile environment moving forward. Okay. It's just going to create a very volatile environment moving forward. However, we'll still, like I said, be able to accumulate, guys. But again, let's just leave with this point here for the week. What we're looking for is getting back above this moving average at 52K. We need a $5,000 increase by the end of this week, guys, to stay in a safe territory and potentially keep 100K in the cards by the end of the year. If not, and we do go into an extended, well, not an extended, but we do start to kick into a bear cycle, again, It's just time to accumulate, guys. Your dollar's going to be stronger. So we're going to get more crypto. And then here's something else. The dollar does this, has been doing this for the last 20 years. It's going to come up to this top band. It's going to reach its dollar point, and then it's going to cascade down. When that happens, and we'll every week, guys, on a Monday, we're going to include this dollar currency index because now we have to track that. Okay. Once this thing gets to the top band and it pulls back, that's when I think we are going to see the run up of the century. Okay. That's my vision, guys. That's how I'm seeing it. But as far as this video goes, I hope you found value in it, guys. This technical analysis had to be on its own because of the depth of the information in it. Still got more content coming out later today. As a matter of fact, I have a bowl of speculation for you for Hedera hash graph holders, us HBAR variants out here. There's an interesting series of events that is coming together, guys, and it's centered around the New York Fed, Shinhan Bank, MTech, and CBDC. So make sure you stick around for that, guys. So, but as far as this video goes, again, guys, this is what I'm seeing. For the week, we need to break above 52,000. If we don't, we could be potentially looking at a very short, maybe 2 to 3 month bear phase. But if that is the case, then we know it is accumulation season and we are going to come out of that bear phase millionaires. Okay. We are going to come out of this bear phase way better than what we started. And I'm going to make sure that happens, guys, because I'm trying to come out the other end eating as well. So, with all that being said, guys, if you found value in this video, make sure you hit that like button, subscribe, notification bell, so that way you never miss another one. Of course, you know where to reach me: Twitter, Instagram, LinkedIn, and we're a little bit on Facebook from time to time here and there. But you know what I'm going to tell you guys. Have a great one. Have a prosperous one. And most importantly, we still going to make this money, bear market or bull market. 'Cause that's how we do it over here. I'll see y'all in the next one.